What are we looking for? That's our topic for today's Backstage Pass. Hey everyone, hope you had a great holiday weekend, a great Labor Day weekend, and enjoyed a little bit of extra time off. First, let's jump into the bond market today. So far, stocks are down a little bit during the midday session. Mortgage bonds are down sharply, and they opened the day sharply. They're down about 77 basis points right now. The 10-year yield is up about 10 basis points. It means mortgage rates have opened higher from where they closed off on Friday. Friday, the national average for a 30-year fixed mortgage was at about 6.02%. Today, we're expecting that to come in at 6.2%, somewhere around there. So here's a question. What are the markets looking for so that we can start to see a meaningful decline in mortgage rates and a decline that stays declined? You know, in July and moving into August, we saw mortgage rates dip a little bit, but they've come back up at the end of August. So what are we looking for? Well, first, let's take a look at commodities. Commodities have many of them have started to come down off of their peak price that we saw earlier in the summertime. That includes lumber, wheat, and copper. Lumber is down 66%, wheat's down 44%, copper's down 30%. When we look at CPI data, that measure of inflation, 40% of that data is made up of goods. So as commodities start to come down and the Fed fund rate hikes start to take hold in the economy, we should begin to see inflation coming down and mortgage rates should follow. Now, another inflationary indicator that the markets watch, that's jobs. On Friday, we got the BLS jobs report, and if you take a look at the headline data, it looked like a strong report, but if you really start to dig into it, it wasn't as strong as it might have appeared. 82% of the job creations were 16 to 19-year-old workers. Many of those are going to be part-time workers. There were actually 230,000 full-time job losses from that report. So when we really start to break it down, that report is a little bit more in line with what the ADP report showed that came out last Thursday. So if you look at the headline data, it looks like a strong report. You start to break it down, we can start to see some weakness in the jobs market. So again, what is the markets looking for? We're looking for inflation to start to come down. Got commodities that are coming down off of their peaks. Got a little bit of weakness that we're starting to see in the jobs market. That should be good news for inflation or good news for mortgage rates. As I said, as inflation starts to come down, we expect mortgage rates to follow. So the question is, what are we looking for? Well, we're looking for opportunity. Now, people are buying homes right now with mortgages, even at the current rates. So that means that there's current opportunity. But here's the next level opportunity, Q1 of 2023. As mortgage rates start to come down, as inflation comes down, that's an opportunity to help those borrowers get into a lower rate that they're having to take right now. You know, date the rate, marry the home, date the rate is kind of what the saying is. So having to take this higher rate, but just letting them know, borrowers know, hey, as interest rates start to come down because inflation is going to come down, giving them that opportunity to refinance at a lower rate. That leads me to the last question. What are borrowers looking for? Borrowers are looking for experts, people that can help them get the best opportunity right now and give them the advice that they need to meet their current financial goals, their current real estate goals, and their future goals. And that's what their agents are looking for as well. And at HomeFi, that's what we can do. We're mortgage experts. We help people, borrowers, and their real estate agents find the right creative opportunities sometimes that it takes to meet their goal. It may not be straightforward, but meet their current goal, meet borrowers' current goal, current financial goal, current real estate goal, and then knowing that, hey, there's going to be opportunity in the future for you to adjust this to something that's not that higher interest rate. There's a lower interest rate. And listen, for us as home, like I said, at HomeFi, we're experts at doing that, and we're experts at doing it as efficiently as possible. That's our definition of digital mortgage, human touch. Now, that's all the news that we have for today. Again, CPI is coming out next week, but this week is somewhat of a quiet week news-wise. We will definitely keep you up to date as far as everything that is going on. But remember, stay positive, have a great day, and we'll see you tomorrow.